It's time now for the business news. We're joined, of course, by Delano D'Souza this morning. Hey, Delano.
Good morning.
You're starting out with a lawsuit which is coming Volkswagen's way.
That's right, Hala. The world's largest sovereign wealth fund says it's planning to sue the German car maker over the emissions cheating scandal in the coming weeks. According to the Financial Times, Norway's oil fund says the company's conduct gives rise to legal claims under German law. The fund's chief investment officer says Volkswagen's management should have known about the existence of defeat devices. Norway's sovereign fund is the fourth largest stakeholder in the car maker, and news of the lawsuit comes just weeks after it said it would start cracking down on executive pay. The $850 billion oil fund is the world's largest investor and owns 1% of nearly every listed company in the world.
Talk us through the markets now, Delano. How have they been opening the week?
We just see European stocks open the session this Monday. It's red across the board at this hour. You can see both the London FTSE and the CAC down over 0.5%. The Frankfurt DAX is closed this Monday for a public holiday. Over in Asia, all the main indices are in the green at this hour. The Shanghai Composite has been under pressure this Monday. Over the weekend, China released data including factory output and retail sales for the month of April, and they both indicate that there was growth which was less than expected. Next, the slump in oil prices has led to a string of downgrades over the weekend. Saudi Arabia, along with its neighbors in the Persian Gulf, Oman and Bahrain, have had their credit ratings slashed by Moody's. The collapse in energy prices has seen Gulf countries cut spending, raise taxes, and issue debt. Now, just last month, the region's largest economy, Saudi Arabia, announced a host of reforms aimed at reducing its dependence on oil. But Moody's says that unless these reforms are implemented, Saudi's economic troubles will continue to intensify. Now, last week, Apple poured $1 billion into Uber's Chinese rival Didi Chuxing. The investment is among the tech giant's largest to date. But what exactly is this Chinese company? Catherine Clifford tells us more on how the ride-sharing app has much more on offer than Uber.
Honk honk commute. That's the literal translation for Didi Chuxing, more than just a ride-hailing app. Users can book buses or even private chauffeurs to drive them home in their own car after a few too many drinks. The app dominates its Chinese market by far, with a 99% market share in taxi hailing and an 87% share in private car hailing. Didi Chuxing operates in 400 Chinese cities, whilst Uber China is present in just 45. Aside from Apple, the company's not short of backers, having secured funding from Chinese internet giants Alibaba and Tencent. It's grown to a valuation of over $20 billion, up from $6 billion in February 2015. Meanwhile, Uber says it's losing around $1 billion a year in China. This latest $1 billion investment from Apple is a rare move for a giant which doesn't often invest in startups, showing the company's increased focus on services over hardware. It's also a likely move to counter slowing iPhone sales and the increasing restrictions it faces in China. Didi Chuxing says further cooperation is to come.
Apple is a lever of tech companies. We respect it very much. The two companies will definitely deepen their cooperation in product development.
For now, the company says it plans to use Apple's money to invest in artificial intelligence to smarten up its system. Though some experts say the money will be needed to fuel its battle with Uber, both sides have already spent billions funding customer discounts and driver subsidies.
Google could face a record antitrust fine of around €3 billion in the coming weeks. The Sunday Telegraph reported officials at the European Commission plan to announce the fine as early as next month. The European Union accuses the internet giant of promoting its shopping service at the expense of rival offers.
So Google have to crack open the piggyback then, won't they? Well, let's finish up, Delano, with some news of a lighter nature. Across in China, after more than a decade in the planning, Disneyland Shanghai is set to open.
That's right. The theme park has already opened for its testing phase. Now, unlike Disney offerings around the world, the $5.5 billion Disney Shanghai will have a distinctly Chinese flavor. Donald Duck doing Tai Chi, for instance, or a Disney spin on Chinese dishes. Visitors will be able to sample local food done the Disney way. Dishes like Peking duck topped pizza in the shape of Mickey Mouse's head will be on offer. It's all part of Disney's Chinese immersion strategy.
We want to have performances that Chinese audiences are familiar with, as well as conveying the Disney style.
It's the first time I've seen it. It's very funny.
It's very innovative.
That's the business news. I'll hand it back to you.
Oh, Disney with Chinese characteristics, eh?
Okay.
Not sure how happy I'd be about eating Donald Duck when I
After watching him doing Tai
watching
Chi.
him doing Tai Chi and he ends up on your pizza. It's very disappointing. Poor
Disturbing.
kids. Anyway, thank you, Delana. Let's